Many of you have asked me about the Amazon stock split. Is it good to invest in Amazon right now? What does this stock split mean for for investors? I decided to break it down for you, and as you know, I'm pretty good on theory behind splits and all that stuff. So I'm going to jump into this today. So get comfortable, buckle up a seatbelt. We're going to get started on the Black Financial Channel right now. Hey, what's going on, guys? Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black wealth and Black economics every single day, sometimes as much as 10 times a day under one condition. The condition is that we are Black first. Black first means we put our community at the top of our priority list. Black first means we solve the racial wealth gap. Black first means we educate our kids. Black first means that we make wealth an important part of our community and our culture. If you agree with this philosophy, put a hashtag B1 in the chat. We are not just here for the money. The money is nice, but life is a lot more important. There are a lot more things going on in life other than just getting a nice new car and a big house. You want to have wealth because wealth is power, wealth is freedom. Wealth is the key to racial equality and racial liberation, if that's the kind of thing you believe in. So anyway, I want to say hello to everybody. My name is Corey, Nathaniel, and Eric Donaldson, and Anthony. It was Anthony and Dale official. Good to see everybody. All right. So how many of you, give me a yes or no, how many of you are aware that Amazon is doing a stock split right now? What's up on Instagram? My Instagram is The Real Boyce Watkins. I see you all over there too. How many of you are aware that Amazon right now is in the middle of a big stock split? It's a stock split that has been predicted for years. If you go back and you listen to me speak 4 years ago, I was telling you that it's only a matter of time before Amazon splits its stock. I knew they were going to do this. I felt like it was the best move for them. And the thing is that the stock split has a lot more meaning than what you might see on the surface. And so what I'm going to do is just basically tell you what I'm seeing here in terms of not just what Amazon is doing and the fundamental reasons in terms of why a company might split its stock, but also give you a little bit of financial theory, some things that we kind of analyze in extreme detail. I've probably read 1,000 research papers on stock splits when I was in graduate school, and there are many reasons why a company might split its stock. And then at the end, of course, I'm going to give you guys a recommendation. If you stay to the end, I'll give you my recommendation on whether or not you want to participate in this stock split and whether that could be a good investment for your family. So hit the thumbs up button, thumbs up, share, subscribe. Also, don't forget that if you want to know some of my own personal stock picks and stuff like that, just go to boycewatkins.com. We have a lot of free resources that can help you. You can get started in the Black Business School for free. We have 150,000 students worldwide. All we focus on is Black wealth. We're the best in the world at what we do. Just go to boycewatkins.com. You can join some of our programs for absolutely free. So don't think that you have to pay money. I don't want that rumor to be out there. All right, so let's move on. All right, so with Amazon, basically, Amazon decided to do a stock split that is effective on, I think it's June 3rd is the last day that it's going to trade before the split kicks in. And then on June 6th, it's going to begin trading post-split. The split is 20 to 1. It's very straightforward. It pretty much is just like if you have a pizza and your pizza is cut into 4 slices and your kid says, hey, I want more pizza. So you say, okay, well, how about I cut it into 8 slices? Right. So now you have 8, you have 8 pieces of the same pizza as opposed to 4. Well, your child might say, oh, great, this is awesome. Now I get more food, when really you know that there's no more food. They're just getting the illusion that there's more food, right? You're taking the same amount of food and you're chopping it into more pieces. That's basically what a stock split is. That's what a stock split does on a basic, simple, one-dimensional framework. A stock split does nothing for the value of the company, nothing at all. There's no reason for an analyst to say, oh, now that the company split its stock, the company's worth more money than it was before. Most analysts aren't going to say that. If you look at what most analysts were saying about Amazon before the split, they were kind of saying the same thing about the long-term value after the split. So there is no direct impact on the value of the company that comes as a result of the split. Now we're going to separate fact from fiction. Okay, so the fact is that there is no addition to the value. The reality or the manifestation of this split is very different. If you study the theories, when you're reading all the research on stock splits, and I looked at data on thousands of companies that have done stock splits, what you will find is that there tends to be, in many cases, a little bit of a bump in the price of the stock as a result of the split. And this comes from, there's a couple of key big theories out there on why this might happen. One is what they call the signaling effect. And the signaling effect is where basically investors believe that managers send smoke signals to the investors to let them know, hey, we got something good going on here. Hey, we're splitting the stock because something big is happening. Y'all just don't know what it is. And Amazon, could be a beneficiary of that, because Amazon has been known historically to sort of pull things out of a hat, just sort of pop out and say, oh, boom, we've got Amazon Web Services. Y'all, we didn't tell y'all about that. We've been investing in it. We were real quiet as kept, but now we're releasing this big album, and it's a number one platinum album of all time, and everybody loves it. Right. So Amazon tends to do that. They tend to surprise their investors with these big announcements that just end up conquering the world or falling flat on their face. So there is a signaling effect that some believe may cause the stock price to go up as a result of the split, even though the split itself has no fundamental impact on the value of the company. Another theory is what they call the clientele effect. The clientele effect basically says, and all these things could apply to Amazon, and I'm going to tell you why. The clientele effect basically says, look, if our stock is trading at $3,000 a share, there's only certain people that are going to want to buy a $3,000 stock. Now, it shouldn't be this way, because you can buy what they call fractional shares. Anybody could buy Amazon with $5. You can put $5 in. You can buy it just like you buy Bitcoin. $5 worth of Amazon. You're now in. You're in the game. You're now an investor. You're making money when they make money. But for some people, that big number still intimidates them and makes them say, maybe that's not what I'm supposed to be doing. Almost like when you ever see people that will stay only on their block in the hood, even though there's no law saying they can't leave and go to another block, or they live in Southside Chicago and they stay on 188th Street. And even though they could go downtown, but they're just scared to, but nobody told them they can't go downtown. They just don't. Right. And so ultimately, there are investors who kind of feel that same way. They look at the stock and they say, man, this is a $3,000 stock. I can't afford a $3,000 stock. I'm a little investor. I'm going to get me a $5 stock. Now, if you're in my class, I've been talking to you guys extensively about not doing this. I don't want you to think that because you're not a person that has a lot of money that you need to buy the lower price little baby stocks. There's no reason that you should buy a stock that costs $5 or $8 or $12 or whatever. There's no logical reason. There's no logical benefit you're going to get. Penny stocks especially are the absolute worst. Penny stocks will rip you off. You're going to lose money buying penny stocks, because the trading environment is highly illiquid. It is a big complete mess. There's a lot of fraudulent behavior in these markets. So ultimately, I'm sort of like, no, trade in the daylight. Like, you have a right to buy into these big, strong, powerful, wealthy American companies just like everybody else. Even if you only got $20 to invest this week, that's okay. We get you a little $20 into something that's going to actually benefit you, as opposed to you thinking that because you got $20, you got to invest in the trap. Get out the trap. Sometimes we stay in the trap because we keep ourselves in the trap, not because somebody else does it for us. So long story short, the clientele effect basically says that because Amazon stock is now trading at a lower price point, they're going to attract a different clientele. They're going to bring different people in that maybe didn't feel invited to the party before, who are going to say, oh, well, now that Amazon's trading at 122 or whatever the number is going to be, then I can go ahead and buy a piece of that now. I can get a piece of Amazon. And that can lead to a bump in the price, because you're talking about increasing the demand for the stock. So all these things kind of come into play. And I'm going to keep digging into this. If you could, let me do real quick and ask you guys, if you could please hit the thumbs up button, thumbs up, thumbs up, thumbs up. Feel free to shout out the city that you're from. I'd like to see what city you guys are from. And also, don't forget BoyceWatkins.com. They actually have a great class called Black Money 101. If you're interested in learning the fundamentals of the power of money, feel free to go to blackmoney101.com. It's a great way for you to get started on just understanding how money works and how wealth works. It's lifetime access, so you can sign up one time and you're in for life. So feel free to go to blackmoney101.com if you are a beginner and you want to get better at this. All right, so moving on. So here's one of the things that Amazon's dealing with. This is the problem that they're trying to solve. Every company is trying to solve a set of problems right now, because all of them are basically captains of big, gigantic ships where there is a tornado from hell coming into the ocean. And they're feeling, and it's not just that the tornado's coming or the hurricane. They see the hurricane that's coming, but there's already been 2 or 3 hurricanes that have come through. There's already a lot of rain in coming out of the sky. There's already rough water beneath them. These companies are struggling. Many of these tech companies are struggling not to make money. This is the kind of trapping of American capitalism. This is why capitalism is um, an unhealthy economic religion, because capitalism is built on excessive greed. And because these companies aren't struggling to make money, what they're struggling to do is to maintain growth. I mean, can you imagine being a company like an Amazon or an Apple where you are literally making more money than God? You're worth $2-3 trillion, and you're now getting criticized from investors because they're like, you grew by 8% last year, but you only grew by 5% this year. But you're like, dude, we just sold 8 million iPhones. Like, what are you talking about? We just made $100 billion a day. But it doesn't matter. It doesn't matter. It's all about growth. So what they're trying to figure out, which is why I would never want their job in a million years, is they're trying to figure out, how do you make a fat kid fatter? If you've already, it's like when on my birthday's coming up June 20th, and my mother said, I don't know what to get you for your birthday because you have everything that you want. And I said, yeah, that's true. I treat every day like my birthday. If I want something, I go buy it. So by the time my birthday comes along, my family is stuck with the impossible task of figuring out, how do we get something that he wants when he's already bought everything that he wants, right? So ultimately, these companies are already making money hand over fist like crazy. They are stuck in a tough situation where they are trying to figure out how to achieve growth. Growth basically means, if I'm a stockholder and I own Amazon stock, I'm going to the shareholder meeting because I want to see this stock go up. I don't care if you're making how many hundreds of billions of dollars you made. If my stock price goes down, then I'm mad. I'm mad. And a lot of investors are mad right now because the market's not doing that well. So the Amazon decision, the smart decision to do a stock split right now, is kind of them pulling out their ace in the hole. They're pulling out that little extra trump card to help them find a way to achieve a little bit of a price bump in their stock price. Uh, when everything else that they're doing isn't working anymore. Right? So because the era of high growth of FANG stocks has pretty much ended for a while. The Federal Reserve has engaged in massive amounts of what's called quantitative tightening, which means that this economy is being choked, unlike anything you've ever seen. The choking, and they haven't actually choked the economy. What they've done is that they've announced that they're going to choke the economy, which right there causes a choking in itself, because now you're afraid that you're going to get choked, and now the real choking will begin. Now they're going to start pulling money out of the economy. Now, all the financial magic that I've been preaching to you guys about for the last 10 years, where the stock market was easy money, a lot of that goes out the window. And now investing becomes hard. Now investing becomes something that requires extensive research. Now investing requires something. I guarantee you, a lot of these fly-by-night financial experts who are now teaching people how to buy stocks, they're gone because they don't know how to make money in this kind of climate, because they don't know what a good company looks like. So ultimately, this is occurring at this particular time. And Amazon stock split is a way for them to find a way to give something to their investors when they can't really think of anything else to give them. Apple is doing things like they're doing buybacks. They're just buying their shares back off the market, which creates a natural bump in the stock price. So so a lot of these companies that are struggling to find yield and growth in this really tight environment are leaning toward whatever method they can find to give the investors something that'll make them feel better. Do me a favor, hit the thumbs up button, thumbs up, thumbs up, thumbs up, share, subscribe. And also, my name is Dr. Boyce Watkins. My PhD's in finance, and this is what I do. So if you haven't subscribed to the channel, I hope that you will. And also, if you go to boycewatkins.com, you can join our Powernomics class. Every Wednesday night, I do a training on Powernomics. Powernomics is a book by Dr. Claude Anderson, which is at powernomics.com. And I am literally going word by word, line by line through that entire book so that as many millions of people as possible in our community are fully aware on exactly what it takes to engage in economic warfare and to win. I do not want you to lose. I hate seeing us come in second place. I think that we are better than that. I believe that we're meant to be great. And so this is my contribution to help make that happen. The class is totally free. So if you go to boycewatkins.com, you can sign up for free. And I want you to bring your kids, because I guarantee you that what your kids learn from me will ensure that your children will be doing very well financially in life. If they do 1% of what I tell them, They will be doing well when they're 25 or 30 years old. They won't be broke. They won't be struggling. They won't be running around complaining about how hard it is to be black. They're going to be doing better than most white people are, because economics is easy to understand for someone like me. So anyway, let me keep going. All right, so let's dig back in. All right, so Amazon's doing this stock split, and it's basically, in my view, their desperate appeal to create yield in an environment that doesn't really offer a lot of yield. A lot of companies, in addition to stock splits, they're doing buybacks. Some companies are doing layoffs. If you notice, pay attention in the media. Tesla has been talking about how many people they're laying off. And then people were like, oh, you're laying people off. Elon Musk, you're a bad person. So Elon came back and said, no, I'm not laying everybody off. It's just the salary workers. We're cutting the fat. We're basically, we're the people that are hourly, that are building cars. Oh, no, we're going to hire more of them. But we're going to go and get rid of the salary people who are sitting around getting a salary for something where we're not sure what you're actually doing. We're going to let some of those people go. So these layoffs and these splits and these buybacks are designed to make the shareholders happy. This is something that I obviously, this is not a surprise. If you want to know if I think Amazon's a good investment, the answer is yes. I do think Amazon's a good investment, not just because of this split. It's because Amazon is a company that tends to be very good at making money. However, there's a warning when it comes to Amazon. One problem that Amazon has is that Amazon has been incredibly. You got to go?
Yeah, I'll see you later.
Okay. Oh, okay, babe. All right. Well, I love you. I'll be back. Sorry, I got to stop. Say I love my wife. I hope that's okay. Y'all hold on for 1 second.
Yeah, love you too. I'm gonna get dinner and food and get the kids and all of that. So.
Okay. So you're going to? Oh, so you're going after the birthday party now? Okay. All right, babe. I didn't know you were leaving right now, but I love you.
All right,
see you soon. All right. Bye. Sorry about that. Y'all know I love my baby. I got to stop, and I'm gonna stop everything for a black woman. And so, all right. So anyway, let me dig back into this. Let me refocus. When she walks in the room, I just lose my attention span becomes real short. All right. So let me jump back in. All right. So basically, with Amazon, you have a company that was doing extremely well. Amazon was pretty much just like the Chicago Bulls in the 1990s. They were able to print money. Anything Amazon touched was seen as something that would just turn to gold. And so so when that happens, and companies have a ton of cash flow, they call this the free cash flow theory. The free cash flow theory basically says that these companies, when they get a lot of money, they start feeling themselves. Kind of like rappers in the club. They think that every album is going to be a hit, so they think the money's going to last forever. So what do? You start overspending, and you start really over investing. So Amazon invests quite a bit of money in a lot of projects that are not going to make money anytime soon. Amazon loves to innovate, which is a wonderful thing, but innovation is very expensive. So Amazon, if you look at Meta, what Facebook and Meta and Zuckerberg are trying to do, they're investing billions and billions of dollars in these projects that are not going to make money till 2028, 2030, 2035. And so effectively, some of that's going to get reined back in. I think that Amazon is going to have to tighten its belt a little bit. They did a lot of overhiring. They built way too many warehouses. And so all these things are going to kind of get pulled back in order for Amazon to kind of shape up, for this new environment. Right now, you're in a belt tightening era, and a lot of companies like Amazon are leading the way for other companies that are going to be tightening their belts. So these this economy where jobs are everywhere and all this other stuff, that's going to change. That's actually going to change because the companies that are doing the hiring can't get the capital that they were able to get before. They also can't guarantee the same level of margin and profitability that they got before. Even companies that make things like Doritos and stuff are now even shrinking the size of the bags because they said inflation is high, but we can't raise prices. So instead, what they're doing is they're shrinking the amount of Doritos that you get in the bag, and they're hoping that you don't notice. So in case you want to know, these are some of the weird little wiggles that companies are trying to make in order to survive. So Amazon is a company that also has a little bit of a labor and an image problem. So this stock split helps them with that. So now, because they split their stock, they can go to all these employees who are mad at them, right? A lot of labor unrest is probably going to occur. That tends to happen during recessions, right? Everybody's mad. Workers are mad because they can't get jobs, and then they're mad because they can't get the pay raise, and then the corporations are mad because they can't get the profits, and so they're anticipating. In my view, I believe that they're anticipating a lot of labor unrest. The Amazon union conversation is consistently happening. There's also a big conversation about unionization happening right now at Starbucks. The baristas are going on strike. they're walking out and they're shutting down the Starbucks location. So Starbucks, and it's really interesting, right? Because Starbucks is a company that's known for being pretty woke. They're pretty left leaning, liberal, everything else, right? And so Starbucks is sitting there like, wait a minute, like, why are you beating up on us? Why are you trying to unionize on us? And so it's really an interesting environment. And so for Amazon, the stock split, in my view, allows them to achieve a couple goals on that front. One, it allows them to offer more financial incentives related to the stock to their employees to keep the employees happy. And then two, when you can throw the stock in as part of the compensation package, it helps you deal with things like the higher cost of hiring people. The cost of wages going up, right? So I think that Amazon is going to use the stock split to establish a greater amount of goodwill and a greater connection with its existing workforce, so that it can hopefully minimize some of the labor problems that the company's probably going to have. They're looking at what's happening with Starbucks right now, and they know that the labor unions are already coming for them anyway. It's probably going to continue to get worse. And I think that the stock split, by sort of democratizing Amazon stock, I think that's going to be a winning strategy. Actually, that's something I did a video on that probably made 4 or 5 years ago, where I said I think Amazon should split their stock and then incorporate more people into their investor base, and then that will minimize hopefully the amount of pushback that they're getting from regulators for having a monopoly and all this other stuff. All right, so anyway, that's what I see with this. I think that the Amazon stock split is good. I know that Tesla is also talking about doing another stock split. They're going to put one before the shareholders for a vote. If you want to know if I think you should be especially excited about the stock split, I don't think so. I don't think it changes anything for you as an investor. Remember, you're an intelligent investor because you listen to me, which means that you're not necessarily somebody who's gonna think that the stock is more affordable because there's a split. I don't want you thinking that way, because there's nothing about a stock split with Amazon that makes it more affordable for you. You could have easily before still gotten on one of those apps, maybe Cash App even, and bought a fractional share of Amazon. So you could have been an Amazon shareholder before the stock split. But if you want to see an area where I think that maybe jumping in now could be a good thing for you, it's not so much how you're reacting to the stock split that matters. It's how you know that everyone else is going to react, right? You know that there could be these little bumps in the valuation because of that, but that's not really the main driver of Amazon's great value. The great drivers of Amazon's value are two things: Amazon Web Services and Amazon's advertising platform. Amazon is making money hand over fist from its web services, and also they haven't even begun to make money with ads yet. So once they dig into the technology and get good at ads, the same way Facebook is and all these other platforms, that could be the avenue for growth. All right. So anyway, that's my 2 cents. That's what I believe. That's what's going on in my world. So I hope this conversation helped you. I hope it helps. I hope you guys make a ton of money this week. And I want to remind you and reiterate to you, don't forget, we have stock market investing class on Tuesdays. If you'd like to join my stock market investing class, you can send me questions. You can see all my stock picks. You can get recordings of all kinds of material and content I've created specifically for you guys. Just feel free to go to boycewatkins.com. You can go do a free trial. And we meet every Tuesday. And then also on Wednesdays, we have Powernomics class. That's totally free. So just go to boycewatkins.com and look for the Dr. Boyce Book Club. That's where we do the Powernomics training. And then also very, very soon, I'm going to do a specialized options training program on how I write covered calls every week in order to generate income. I'll show you specifically how I go about picking the stocks that I want in the portfolio, how I go about choosing which strike prices, how I go about choosing the best way to generate the income each week, and how I go about modifying my portfolio every week to make sure that it stays where I want it to be. This is a great way to make money. And if you know exactly how these things kind of work, it's easy to kind of find ways to add to your income. All right. So anyway, guys, I hope you guys have a wonderful day. It was great talking to you. God bless you. Hit the thumbs up button on your way out. I love you, and I shall see you soon. Take care now. Peace.